Rushabh Sheth is joining us from Karma Capital to talk exactly that. Rushabh, thank you so much. Good to have you on the show. Rushabh, let
Thanks
me.
for having me at the show.
Great, lovely. Rushabh, I want to understand with you. I mean, just look at the way dollar index has collapsed overnight, now nudging the 102 mark. Bond yields have also softened. Increasingly, the narrative gathering currency that inflation has peaked out world over, not only the US. Look at the Australian inflation data overnight. So, if indeed the rate cuts arrive, Bill Ackman overnight said first quarter of next year. Largely, expectation is by mid of next year in the US. How far would we be behind? You know, just yesterday on this exact show, we had Chetan Iyer said India, China, India and Indonesia would lead rate cuts by mid of next year in Asia. Do you agree with that?
We are not really great macro guys, but I think by and large, if inflation remains steady or continues to decline, I think obviously there will be a merit to a rate cut sometimes in the next year. From an India perspective, the inflation clearly seems to be trending down as it is in other parts of the world. So if it continues to trend down and you don't see any spikes in commodity prices, then I think there is obviously a merit for a rate cut sometime next year.
I asked you, Rishabh, was not on a macro call but per se, but how the discounting for equities would actually start happening. Indian economy as well as markets were pretty resilient in the face of the rate hike cycle. What is your hypothesis? Would they fare in the rate cut cycle?
Yeah, I think as you rightly pointed out, Ajay, I think markets have done well despite increasing interest rates in India, at least over the last year and a half. So my sense is that if the rates decline a little bit, it's not going to change the macro too much from an equity standpoint. I think the focus will continue to remain on earnings growth and valuations rather than interest rates. And anyway, the gearing on most corporates is not very high. So, we are in a cycle where corporate gearing is at an all-time low, at least from a couple of decades perspective. So I don't think so. Lower interest rate or a notch lower interest rate is going to significantly change anything from an equity standpoint. But however, I think from a psychology standpoint, yes, it can be a little bit of a booster.
All right. Let's start talking about some of the sectors and spaces which are reflected in your portfolio. One of the South-based two-wheeler company figures there. And in general, the way two-wheeler, all the three two-wheeler companies, be it TVS, Hero, Bajaj, have come back. In the last 1 week, we have interacted with many of the managements and got a feeling that beyond Diwali too, which means next to the 12 months, most of them, in fact, all three have lined up big launches. What are you making of the three-wheeler valuations right now? You've taken a bet on one of them because they are historically have been very dependent on the rural or the tier 2, tier 3 demand, which was anemic. Do you see that come back?
So from our perspective, we are more bottom up, and as you rightly said, we have one of the two-wheeler manufacturers in our portfolio, in one of our portfolios. From our perspective, the demand clearly seems to be doing reasonably well domestically. I think some of them had an issue in international demand last year with high inflationary environment and in some cases currency issues. But by and large, I think the domestic demand continues to be stable. And we think that that's not really going to change too much. You are absolutely right. The rural demand still continues to be a little bit anemic. We don't know how that's going to play out. We'll have to wait and see how the agriculture and rural economy plays out over the next 6 to 12 months. But even apart from that, I think the domestic two-wheeler demand has been reasonably good. And I think that's not going to really change too much in the next 12 months.
Okay, yes, you're right. For example, TVS Motors, in the last 1 month, there are 3 geographies they've expanded to: Vietnam, even European, big tie-ups coming in for the distribution. Up till now, only Bajaj was seen as the export kind of a play, but now TVS is upping their game in exports as well. But moving on, the other space I want to talk to you about is real estate, especially Western real estate players like the Pune region, Mumbai region, or some, in the Gujarat region as well. Volume data shows that premium realty is just flying off the shelf, and there is no demand. In fact, some of the big developers are saying inventory is dropping to 10-year lows. What do you make of momentum in realty? And you have some names as well on that side in your portfolios.
No, I think as everybody knows, I think especially on the western side, I think you've seen significantly strong demand over the last 2 years post-COVID, and I think that's not changing at least in the near term. I don't know the exact inventory data, but clearly we were talking to some people in the industry, and what you said is exactly true. In fact, some of the larger formats, more premium real estate is selling faster than some of the smaller formats and so-called, reasonable real estate. So it's very peculiar in terms of the demand, especially Mumbai, I think has been very peculiar in terms of demand. So we don't think so that again is changing. And keep in mind, this has happened despite of higher interest rates environment. Typically, you would think that higher interest rate environment would have impact on demand for real estate, because that's really a lot of it is through mortgages. However, we have not seen that in the last year and a half. So very interesting, very strong trend in real estate in the last year and a half, especially in the Western market.
Rushabh, pharma, I see a lot of pharma names like Cipla, Sun Pharma, Dr. Reddy's in your portfolios. But we'll talk about what's happening in pharma. Up till now, last few years were not good because of strict regulatory glare, pricing, kind of pressures there in the US. And the market was more interested in domestic pharma-centric names and was underweight on overseas. Do you think that the worst of the pharma exporting, the time is gone, and now things are looking upwards in the next 2-3 years for pharma exporters, things look good?
See, from our perspective, we are also more bullish on the domestic markets. We think structurally domestic market are poised to grow and grow very strongly. There is also a case for consolidation. So if you look at the top 20 companies, still control maybe less than 50% of the market. So there's going to be a structural cycle of consolidation in the domestic pharma business. And I think that and of course higher spends, and we were going to continue to see as the economy does well, as your per capita income rises, pharma will be one of the areas where you'll see significantly larger spend. So I think the domestic story continues to be pretty strong. I think the other important change which has happened is the capital allocation. So capital allocation for a lot of these companies has become much better. They have been focusing more on the domestic market. US clearly still remains an important market for many of these players. And the current demand environment in US, especially considering that the pricing environment has stabilized and you see shortages in some of the products. So overall, we think that the domestic story is very strong and will continue to grow. And at least from a near-term perspective, even the US markets don't look that bad. In fact, for some of the companies are doing very well in the US markets because there's consolidation happened in the US, and you're seeing shortages in some of the products.
Rushabh, what are your thoughts on the aviation market? On the one hand, there are some which are almost on the brink of falling off the cliff. There are some aviation companies that are doing phenomenally well. But I was always surprised why this large, almost monopolistic aviation companies are not getting the right valuations. I mean, a company of 70,000, 80,000 crore MCAP clocking almost 7,000-8,000 crore profit, annual profit, trading at 10-11 times. Where are we missing out on? I mean, and the growth visibility is so good in this space.
Yeah, I think there is a little bit of an apprehension because globally these businesses go through very strong cycles, both up and down. And then maybe because of that, maybe there is some investor apprehension. However, as you rightly said, we believe that the aviation market in India will grow very, very strongly. We are reaching a point from a per capita perspective where at $2,200, $2,300 per capita, you will see a hockey stick like of growth in this industry. And you're already starting to see that as users, we see significant traffic on almost all the airports that you go to, or the major airports that you go to in the country. and you kind of struggle with the pricing on many of the tickets on the domestic sector. So my sense is that this industry will continue to grow. On the airline side, it has practically become a duopoly. We'll have to wait and see how this industry kind of goes from here. But currently, it's definitely a duopoly market. And you're right. I think eventually, if the pricing discipline is maintained and profitability continues to come through, these companies should maybe trade better.
All right. So the next 12 months, what are the couple of things you're watching out for as far as your portfolio is concerned, or even the investing landscape? Few triggers or monitorables in your view.
No, I think from our perspective, clearly we are running into an event next year in terms of elections. We'll have to wait and see what is the outcome, and that's a big event from a market perspective also. And from a global perspective, also you kind of see a lot of confusion in terms of people's views on how the global economy, especially the bigger economies like US and China, are going to play out. China is clearly slowing down, and we don't know how the growth in China will behave over the next year or so. There is a lot of talk of US also slowing down considerably, and higher interest rates kind of with a lag starting to show up in the economy. So we need to wait and see. Apart from that, I think domestically India is very well poised. We still believe that from a global perspective, India is also very well poised because with China slowing down, the lot of global investment flows might be redirected to other emerging markets, and India being one of the bigger beneficiaries. And I think from a economy standpoint also, I think, as you rightly mentioned, we have weathered the higher interest rate and higher inflation storm much better, and therefore, as this headwinds start to cool off, there will and should be a slightly more stronger growth coming through for the Indian economy. So I think we are well placed. There is, of course, a major event here next year. But I think globally we'll have to wait and watch how things pan out, especially in the larger economies.
All right, Rishabh, we'll let you go on that one. Thanks so much for your time. Always
Thank
enjoy
you.
our conversations. That was
Thanks for having
Rushabh
me.
Sheth of Karma Capital, talking about some parts of the portfolio and, of course, his view overall on the market.